Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. For those of you new to the channel, we look at 10 to 12 futures markets in the mornings, identifying potential breakout trades and turning points from an educational perspective. For those of you that are regular viewers of the channel, do me a favor, drop a like or a comment. Helps the algorithms know that people are watching. And if you're not new, click that subscribe button. All right, let's dive right in. So, big reversal yesterday. Big turn of events in the S&P. Had a nice deep pullback before then reversing. Now, I will tell you yesterday that we had a live trading room, and I genuinely felt like we're setting up for a decent breakdown. That was really the trade that I was looking for. However, on our breakdown line, we had 1, 2, 3, 4, 5, and on the sixth candle, we hadn't really moved. So, my rule is if I place a trade and after 6 candles, I haven't really gone anywhere, I'm out, right? I'm out because it's not moving the way that I expected it to. Now, why would I have been looking yesterday at going short? Well, very simple. The 4-hour chart was still telling me to be a seller. I didn't have a higher swing low or I had a higher swing high, right? So for those of you that watch very regularly, what you'll know is that I talk about, trends for me are defined as swing lows and swing highs. And when I'm looking at swing highs and swing lows, I identify where are those areas, right? So here's a swing high, swing high, swing high, right? Swing low, swing low, swing low. So I had lower lows and lower highs. Well, now I had, for the first time in a long time, we put in 2 days ago a higher high, but I didn't have a higher low. So an uptrend is not official until I have a higher low and a higher high. We'll take a look at this now. Now I officially have a higher high and a higher low. So now it's okay for me to be a buyer. Up until that point, up until we had put in a low yesterday, I was not willing to be a buyer. And this is something that I said a couple of days ago. If you had the fortitude to ride most of this trend down, which a number of us did that were short, it was because there's no reason in trying to guess the bottom. I'm not going to guess the bottom. My style of trade is that I trade with the big picture. And so that means that when the big picture changes direction, I may miss a few trades, and I'm okay with that. I'd rather miss a few trades than prematurely get in on some of those things. So now what I'm looking at in the S&P is, are there opportunities to get long? Well, so now I've got to look for potential long trades. And we do have a bit of a ceiling area that's being put in right here at 25.20. Now, if I look at that same ceiling area in the NQ, I've got that same level just above here, right? Now, this is a level that's been hit a couple of times. It's up above the 6,400 mark. The more basing we get in front of the level, the better that it is. I was just speaking last night to a friend of mine, Eric, and we were talking, he's talking about pension fund rebalancing at the end of the year being a large part of this catalyst to this move up that we've had over the last little bit. So, I'm more apt to be a buyer than a seller when I've got swing highs that are telling me that I've got more opportunities to be a buyer. And so, now what I look for is a potential breakout above that area. When it comes to pullbacks, if I go to a 15-minute chart, I may be able to take a look at this area down in here as a potential for a long entry on a pullback. That would be the next area to look for. All right, next. Crude oil. So crude oil yesterday in the live trading room, we had looked at this area right up in here for a potential reversal. Now, depending on how tightly you have your areas placed, we used the lower level as a confirmation style trade and the higher level as a limit entry. And so your confirmation style entry very well could have gotten triggered here with a nice little move out of that zone. So that level is no longer valid. We'd now have to look to this one up above. Now, because we almost touched this one up above, we got as high as 46.20. And our bottom level here, our bottom level there is 46.26, I think is the number. Because we came close to that area but didn't enter into it, what I now need to do is convert this to a dashed line trade. Because this now becomes more of a confirmation style entry. Matter of fact, I think there's a better chance that we'll make it all the way up to here next time around, if we make it there at all. There is a potential this morning that if we just make it up to this region, that we could see a reversal. Now, be aware that there are inventory numbers coming out this morning. I think is what the announcement is, and that will cause additional risk to any of these trades. Next, gold. So in gold, we've hit our level once and moved away. We've now hit it a second time, but notice this is a confirmation style entry. We got about halfway into the level and we got the move away. So this level would indeed be triggered. However, 1, 2, 3, 4, 5. Now is the time, if you did get in on this, to move your stop down to break even. We're not moving, the level's not moving all that much, so I would move that stop down to break even if you did indeed enter that position on gold. Looking at bonds and currency markets. So in our bond and currency markets, really nothing to add from our bond markets from what I spoke about earlier this week. We've really just kind of chopped along sideways, not a whole lot happening there. In the Aussie, had a potential breakdown below this area here. That breakdown actually did not come to pass. We actually popped right back up above that pivot high, and now let's see if it can move up to this next area right up in here. The euro, we are still between two major areas. When I look at the euro on a 4-hour chart, it really doesn't give me any definitive direction. Relatively the same swing highs and lows here over the last little bit, and so I've got no definitive direction. Canadian dollar, a little bit better. It has met our potential reversal entry, and so price is beginning its move away. But once again, 1, 2, 3, 4, 5. We're on our 6th candle. I would now take my stop and move it to break even on the Canadian dollar as well. Looking at Great British Pound and Japanese Yen, neither one of those have hit the levels that we had talked about earlier this week, as they're both still fairly far away from each of those levels. So, when you look at it, we've got essentially the level in the Aussie that didn't necessarily work out, but the gold level, the Canadian dollar level, all worked out just fine. Crude oil worked out really, really well, and now we're just waiting on potential breakouts in the S&P, as it looks like for at least the intermediate time period, right? If you use the 4-hour, to tell me am I a buyer, am I a seller, it's told me that I've got opportunities now to be a buyer for the first time in a long time, right? We'd been nothing but selling and doing very well with it, but now it's time to, I got to be willing to change my bias when the market tells me to do so. All right, everybody. Well, thank you so much for joining us this week. If you've got any questions, please feel free to send me an email, support@tradersarmy.com. I will see you all on the flip side. Later.